Okay, we're going to continue chapter 14 today. We have a few sections, two more sections of chapter 14, and then we're just going to cover to the third section. The fourth, the non-cash activities, we're going to briefly cover this, and then we'll do a brief review on final exam. Right, so chapter 14, we covered up to operating activities the other day, last week. Operating activities and cash flows. Again, the purpose of statement of cash flows is to capture all the activities that relates to cash inflow, cash outflow, and we're just going to break it down into different categories. Okay, so in terms of the entire statement of cash flows, it incorporates three main sections. We have operating activities cash flows, anything that relates to income statement accounts and current asset inflow, outflow, current liabilities inflow, outflow goes into the first section. Okay, so there are three main parts of statement of cash flows: operating activities, investing activities, and financing activities. So today we'll be going over a little bit of each and every section's examples, so you know how to input cash inflow information, how to input also cash outflow information. Again, the key point here is that anything that has nothing to do with cash do not go into this statement. Okay? Anything that has nothing to do with cash inflow and outflow do not go into this statement at all. So when we start this entire statement, we usually start adjusting cash inflow, outflow amount from net income. But keep in mind that net income sometimes incorporates a part of sales. For example, sales on account goes into sales revenue, goes into net income, but it has nothing to do with cash sales. So we're going to tease out some part of net income that has nothing to do with cash and then add in the part that we did not consider in net income that has something related to cash amount. Okay, so operating activities in summary, these bullet points are just examples. Okay, it's not the entire set of cash inflow, outflow activities. There's many different activities going on in the business. You don't have to know them all. You just have to know when each and every problem gives you a few activities, what are the ones that falls into which section. Okay, so anything that relates to sales revenue, if it's cash sales, if it's, for example, reducing accounts receivables based on collecting earlier sales on account, anything that relates to current asset, short-term asset, current liabilities, if we pay off current liabilities, short-term notes, those are the things that will go into operating activities section. Okay, later we'll do an exercise on classification of some of the activities. So anything that affects net income on the income statement, if it affects cash inflow, anything that affects current asset, current liability, those activities, cash amount, inflow, outflow goes into operating section of statement of cash flows. Okay, this part in this entire chapter is very important. We're going to go into more details in this part. Throughout the entire chapter, the entire statement here, operating activities, this section, it will be most important for you to review on final. Okay, this part is relatively harder, this entire section, operating activities, compared to investing and financing. Okay, because this part is more complicated, you have to get this part right. This is the most important part and more difficult compared to the other two. Okay, now the last bullet point here, gains and losses on equipment trading. Later when we go into examples, you will notice that this part, remember this is usually listed at the very bottom part of multi-step income statement. Any gains and losses that we receive based on trading assets. Remember earlier in chapter 9 we were comparing trading away book value with the cash that we're receiving, right? And then comparing whether there's gain and loss, which one has higher value than the other. But this part here, even though it's an income statement, later on we will tease out this part from operating activities because this really relates to long-term asset trading. So any gains and losses later on, we will exclude it from operating activities, and then that will be included in investing activities. Okay. Okay, so later when we go into examples, this last bullet point here, gains and losses on equipment trading, since it is related to equipment trading, it's a long-term asset activity. Later on in operating activities, we will list it there, but we will minus the gains, add back the losses. Okay, because gains earlier was added in net income. Losses was subtracted from net income. Later we will exclude them out because it relates to the second, investing activities.